Hello, and welcome to the Bellingham Real Estate Podcast. I'm here with Valerie Richardson. Welcome, Valerie.
Thank you.
And we are talking about the first quarter of 2022 and just giving a little market review and then what we're seeing in the second quarter. So just a general real estate market update. And I have Valerie on because Valerie is one of our most veteran brokers. So you've seen this cycle, a cycle like this before.
Yep.
So share with everybody your real estate background.
I started here with John L. Scott in 2002.
Mm-hmm.
So yeah, we've been through a couple of these cycles.
What month in 2002?
February.
Oh, so you exactly one more year in the business than I did because I was just a little over because I was like March, April of 2003.
Yeah.
So
just barely.
Yeah, well, that's a full year of more experience than me. So we got to give you credit for that. So, so you've been through this, although it's quite a bit different though, isn't it? I mean, it's not the same. It's so much different.
It's, there are seller markets and we've had some really strong ones, but this one's kind of a little bit more voracious.
Yeah.
I mean, you have to be on it to as a buyer to get a house in this market.
I mean, I'd say even more so than 2008, 2007.
Yes.
Absolutely.
Yeah.
And so touching on the numbers. So the first quarter of 2022, we saw 16% home appreciation. And that number can vary. If you look at different markets, Bellingham was 10%. That is really from December. You could wiggle the numbers. You could say that it was more like 10% home appreciation, depending on if you go back to October. But essentially 10 to 16% home appreciation in the first 3 months of 2022.
Yeah.
We saw inventory stay or drop and an absorption rate now of a half a month for Bellingham, 0.8 month for Whatcom County. So under a 1 month supply, which means homes are selling faster than more homes are selling than what's coming on the market still.
Yeah.
And we saw sales down about 10%, actually 11% from this first quarter of 2021, which was a record-breaking year. So sales are still strong, but lack of inventory, right? So that's the story as far as the numbers go. And then, of course, the other big thing is interest rates. Interest rates started at 3.25. They're now upwards. They were at 4.67 at the end of March, but are they 4.75 or what are they now?
And they're a little bit higher, right? And they're making buyers very nervous.
Right. Closer to 5% even right now. So interest rates have been rising. So that is kind of the scoop on where things are. I wanted to have you on also because the way things have been going, the stories that you hear before, multiple offers, 50,000 over, 25,000 over, those are cute stories from like last year.
Yes. Oh, if only.
Yeah. $25,000 over. Share with everybody a couple of the sales you've had this year.
Yeah, I've had a couple of kind of outliers, but one was I represented a buyer. The other is representing a seller. Mm-hmm. So on the buyer side, we ended up with an escalation. There were 34 offers. Mm. And when coming into the offer review time, we're learning just about how many offers were coming in. It was a real gut check with the buyer as to, how much do you want this house and how much do you want to stop looking for a house and move this forward. And we came in really strong. We even the day of the review, we bumped up another that morning and changed our offer. And that's the only reason we got the house.
So
this one was the list price was $450,000, and we bought it at $700,000.
So $250,000 over asking price.
Yeah.
And we should throw a caveat on that.
And we weren't alone at that price. We just there was another one a little bit higher, but we were cash.
So I was going to mention that with that one in particular, it started a little bit low.
Yeah.
The sellers definitely wanted multiple offers. They wanted it gone. It was an as-is, kind of fixer home. Mm-hmm. Could have easily been listed for $550,000, $600,000 maybe even. But definitely no one would have assumed necessarily would go for $700,000. But 34 offers, $250,000 over asking price, $700,000. You said there was another
Yours went a little bit higher.
A little bit higher. And you guys were cash waive everything? Or did you waive
I
it?
think we did a pre-inspection on that, and then we were able to waive a lot of things.
Waive a lot of things.
Yeah.
Yeah. So $250,000. And
then,
so,
of course, you're not worrying about an appraisal with cash.
Right. So you have somebody who maybe comes in at $650,000. Maybe they waived appraisal, maybe they waived inspection, and they're feeling pretty good. They come $200,000 over asking price.
Oh
and
my,
maybe they came in 7th or 8th place. Which is
and our offer was like that the night before.
Oh, so you had just lost out on a home?
No.
Oh, you mean that's where it was? That's where it was. I'm sorry.
And then we had to do a gut check when I found out how many offers were coming in.
And
you know what? I've got to tell you, that buyer is so happy.
Yeah.
She has the story she told me is, I feel like I got under that door coming down, like, you're in a movie and the door's coming down and you're trying to scream under the door.
Yeah.
And she got the property that she wanted, that she needed in a certain configuration that was specific to what she needed to do with her life. She got right under that door and barely caught the last shoelace, right? So it all depends on where you're at and what your buyer needs are.
That's a good point.
And you got to if you see it, you need to go all in if you're going to get the house.
Well, and when did that close?
Just a couple of months ago.
But here's the thing is, when I was looking at the statistics, most of the 12, 11 to 16% home appreciation so far this year actually came really in mid-February through March. And so, a sale like that, maybe at the time, $450,000, $500,000 seemed like an okay list price. Things have kind of reset essentially.
Yes.
To where that wouldn't even necessarily look like, if you relisted that for $700,000 today, even just 2 months later, it wouldn't seem that off. And so it's not like she bought it way over what the market was kind of creating.
It's
even
just
in
where
that.
Are we headed? And is it better to bite it now and get it?
Yeah.
Or wait?
And this buyer, was she somebody who wanted that home for the long term?
Yes.
Right.
And when you have like other requirements, like you need to plan for extended family or be able to, one of the things that's really hot right now are an option for extended family, an exterior separate entrance, possible make it a rental for rental income.
Or additional dwelling unit.
Anything like that is really in demand. And so if you find something like that and all you got to do is fix it up, and if you can, then
that one had a basement, right? With a walkout basement, right?
Yes.
Yeah.
Yeah. With an exterior entrance.
That's true.
And it had a lot of other nice features too.
So
it just needed some loving.
So it still has upside even at the purchase price.
That's a great upside. Yeah. And wait till next year.
Indeed. Indeed.
Because last year I had a buyer and I remember saying, I can't pay $600,000 for a split entry on Alabama Hill. And I was like, no, you can't. I mean, that just seems like a lot. Well, look where we are now.
Right.
Yeah.
Right. Well, and so it's kind of like the conversation has become, because things have been going up so rapidly, it's very easy to get caught up in, well, gosh, I could have got that for this at that point. The better question right now is, okay, well, what do you think things are going to be like in a year?
Yes.
And or in 2 years? And do you see any path to where that's going to be lower price for you or less expensive for you to buy? If the answer is no, then it doesn't really matter actually in a lot of ways what happened in the past.
No. That's gone.
Yeah, exactly.
Yeah. Waiting is not your friend right now.
No. And so talk about the listing then too, because this is just as good.
Oh my gosh.
Yeah.
So then another dramatic one was, so I listed a house, these things kind of market responses happen when you have sort of a unique property, especially. Mm-hmm. So how long has it been since we listed a really nice Rambler in a really nice mature neighborhood, pretty central in Bellingham, privacy in the backyard, beautiful grounds, moving condition. Every time you put an and to something, the price goes up. Right. And pretty soon you've got the unicorn.
Yeah.
So that's what I had.
Yeah.
And so we listed a lovely, lovely Rambler, about 2,200 square feet. I listed at $872,500. I know we had a couple people drive up from the Portland area and someone else flew in from somewhere to see this house. And we got 12 offers and it pended and closed at $1,145,000. So it was $272,000 over asking.
$272,000.
Another one like that.
And I have to preface this by saying that I'm not trying to make this sound like this is the normal.
No.
But it is telling on these are
Can
great
happen.
examples of what can happen and have happened in the first quarter of 2022.
Right.
And those are two sales in Bellingham both.
Yes.
That have been a part of, but not the complete picture of what's been kind of resetting things.
Right.
So yeah, now it's like you just said it. So now if you have a sprawling rambler that's modern, move-in ready, mature landscaping, great neighborhood,
everybody's looking for,
that the demand is so high that, $700,000-800,000 now is not going to get it done. And now it's $1 million property essentially.
Right.
And it's just the world we're living in. And unfortunately, there's a couple builders who are trying to build those homes, skiers. Mm-hmm. Was that a skier's home?
Originally, yeah, it was
built by Dick Skiers.
Yeah.
And so that's a skiers built. They're trying to build, and I know that their new homes are going to be starting over $1 million. So it's not like, and you just said it had, and especially the over 2,000 square foot ones that they're going to be building. Mm-hmm. And so you just said it's even the resale market, but it had the mature landscaping. It had probably some things that a new home wouldn't have.
Absolutely. And that is exactly right.
Right.
Yeah.
People don't like the better than new joke, but there is some things about.
There is something when it's mature landscaping all around so that you have a sense of privacy. See, privacy is the thing, right?
Right.
That adds to that one. In any market, buyer market, seller market, recession, pandemic, it's worth what someone's willing to pay for it.
Right.
And when people say, what do you think this will sell at? I mean, we are having a hard time predicting. Yeah. Because we don't know what someone is actually willing to pay for things, right? You can't really predict that. And so you go as best you can and then put it to the entire market and let the market dictate.
And so before we jumped off, I wanted to touch on just this new world we're living in as far as how offers are working, how buyers can navigate this market, and kind of what's happening moving forward. Obviously, with interest rates rising, it's actually, I'm finding when I'm looking at the numbers, it's having two effects. So on one measure, you can see that, okay, there's going to be a slew of first-time home buyers that are just going to fall out of the market and that are going to be being pushed out of the market, unfortunately, or getting pushed into outer markets because affordability obviously is a major issue. On the other hand, you have sellers who maybe were going to sell and put their house in the market this last month or two or in this next couple months, but with rising interest rates, they're hesitating to make the move. And because, can I even buy? What can I buy? And then you have this self-fulfilling thing where if enough people aren't moving, then you have less and less inventory. So they don't see selection. They also see the higher interest rates. Maybe they have a 2.5% rate on their house. Yeah. And so you just have less inventory. Less inventory affects, obviously, home pricing. And so, and then you add that on, compound that on the fact that we just don't have the new construction. And with the pandemic, we're not going to have it for a while still at nearly the level we need. We have this interjecting thing where home sales are slowing down because of rising rates, because of low inventory, but home appreciation continues. Right. And this demand for every great listing that comes on continues. How buyers are we're using all sorts of techniques to help our buyers get into homes. And all sorts of new resources, new bridge loans that we're working with. You know how we're using, we have a couple partnering lenders that we're doing new bridge loan products for. What kind of conversation are you having with a buyer today that's different than it was a year or two ago? You kind of touched on, you got to be really serious about what you want to do. But yeah. I mean, how has that conversation changed for you?
Yeah. Don't give up if you have financing. It's not that, I can never compete with cash.
True.
That's not, no, you can. Yeah. You might need to outbid them.
Yeah.
Right. But, we're having conversations about earnest money and making enough of an earnest money or even a non-refundable deposit, which, there's a gut check for you. But if you're very confident in your financing, if you've gotten all the way through underwriting, that's awesome because that is really strong. That takes risk out for the seller and it makes you more competitive. If you have extra cash, put it toward additional down payment and tell the seller that through the 22AD form that you will cover any shortfall in appraisals, because that's another thing a seller worries about. You want to take as much of the risk out as you can financially afford for the sellers to make it most competitive.
Yeah, and I think that is the difference between now and before is buyers could still, even in a very strong hot seller's market a year or two ago, still say, okay, I'm going to wait on figuring out a couple of these things until I get under contract. Nothing is, there's not room for any of that now.
No.
So buyers who are not 100%, pre-underwritten, pre-approved, have all their ducks in a row, are just not even competitive. And then we call it buyer ready day one. That's the John L. Scott term. But what you're touching on is really, it's like everything is now pre-offer, essentially. It's like, I got to get fully underwritten.
Yep.
I have to pre-inspect the house a lot of times.
Please pre-inspect if you get a chance.
Yeah, I have to do everything up front.
Yes.
So that I can approach the seller with an offer that has... that has very little risk for them, but and is as strong as possible. But it's also because I've done even more due diligence.
Right.
So the buyers have to do more and more due diligence up front. And that is going to continue to be the theme into the spring and summer, no doubt about it.
Yeah, absolutely. And write the strongest offer that you can. If this is the house, you got to go all in. Don't go past.
Yeah. But
go all in to get it.
Yeah.
Because it is a very competitive market. You do your research ahead of time and then.
Yeah. And so if you need help with such a thing, you can see that Valerie she's helping her clients win on the purchase end. You don't necessarily have to go $250,000 over to win. No.
We're talking about extremes today.
Yes.
Because it's fun to talk about.
Yes, it is fun. It is interesting. And then, but we do hope to repeat your success on the listing side for your seller, for your sellers.
That was really. Yeah. It was good for the seller.
Yeah, exactly. Yeah. I mean, it's that's the thing, is it's kind of monopoly money where, hopefully you have a house to sell and you can take advantage of the market at the same time you're trying to make the move.
Yeah.
So thanks for jumping on, Valerie.
Yeah, sure.
This was fun. And thanks for watching or listening, guys. Cheers.